Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Monday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we've seen from the evolution of Thursday night and the discussion of the Ebola case, which knocked us down to 34, is we continue to see dips get bought. The dip that night, I tweeted out that I really thought it was an overreaction because if you're getting news at night and you're trading 11 handles over, if you're only down 11 handles and you're trading 14 handles above the middle band, that's not a situation where we're going to be pushing down with any serious force. You've seen time and again when news is real, when the market really wants to care about news, you see us down 20, 30, 40 handles, especially with the volatility that we've had in this market. So an 11 handle hiccup Thursday night, that's nothing for this market. We've been doing 10 handle swings in 15, 20 minutes lately. So predictably, that got bounced. They took it all the way up to 65.75 into the Europe Open this morning. Europe has sold this pretty hard. We've been steadily down since Europe Open. We're trading at 49.25. So the first thing you have to ask yourself is, this move up. Yeah, I was looking for 68, got 65.75. You've got October the 9th here, we did 68.5. 27th, we've done 65.75. So you have to ask yourself if that 66 to 68 area is going to be resistance. If it is, then maybe what we can get here over the next couple days is a full-blown test of the middle band. Middle band established itself as support Wednesday and again on Thursday. Friday, it just did a hammer and went over the 50. What I think is more likely today is that we get a test this morning of the 50-day exponential moving average, which is trading out 43.84. So call it the 44 area. You see how we did 2 days here on the 20, 1 and 2. We hammered that just like we hammered this. So now to come in and test today the 51 and maybe even tomorrow would establish another floor. Remember, the 2013 to 2014 uptrend was established on creating consistent floors within the market, like rungs on a ladder or stair steps up. A level gets tested, it gets tested again, it becomes a floor, we reach to another level. Then we come back, test the prior level, so on and so forth. That may be what's happening here. What I'm seeing, though, what I'm not seeing is the bears being able to consistently knock things down for the last few days. I mean, let's zoom out. They had a very good chance. We did a true 10% correction, created our first floor here at 13 to 15. They lost control here. It's okay to have a 4-day, multi-day bounce off of a 10% correction. But if you're the bears, what you have to do is you have to shut the door at middle band, or worst case, shut the door at the 50-day. Now, what we may have here, potentially, if you're a bear, what you want here is just a really sloppy test of the 50 where we get it back and you push back down below, and it just ends up, in a month looking like a really sloppy test of the 50-day exponential moving average. Market's not acting that way, though. So what I told my subscribers this morning is this. You have to be there to buy dips, and you have to assume that the bears are guilty until proven innocent, because if you don't, then you'll be getting short when you should be getting long, and you'll be dumping the longs way too early. So keep that in mind. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. It's a great time to start. We've got dozens of new members, a lot of people to learn along with. We would love to meet you and see if we can help your trading. There will be no webcast tomorrow morning. I'm traveling. I will be back Wednesday morning with another webcast. Trade them well, everybody.